which are having a very smooth sailing. That is where the trend is very clear and whether we should be long or short in that. Now, before we go into that, we will look at some of the important factors that are right now affecting the equity markets and what is expected. The most important thing is the RBI credit policy, which is due to come tomorrow. The RBI is expected to increase rates anything between 35 to 50 basis points as inflation is running above 6%. 2 to 6% is the mandate given to RBI. So they should maintain this inflation in this band of 2 to 6%. So the most preferred median is 4%. But considering whatever that has happened globally, the liquidity that was infused post-pandemic and so many other fiscal measures taken by various governments, we have now seen the inflation consistently maintaining above 7%. But our repo rate is still at 5.4%, which means that the monetary policy is still accommodative. That is, the interest rates have to increase because we are at negative interest rate. If inflation, official inflation is running at 7% and we are at a repo rate of 5.4%, then it does not compensate the savers for the inflation that is there. So at least if it has to come above 7%, that's the most meaningful thing that has to happen. So RBI may not do that immediately, but at least they will move step by step towards that. So we are expecting a 5.8 to 5.9% repo rate by tomorrow. And then probably the repo rate can go to 6.25 to 6.5% by year end. So we should expect the inflation to come down slightly and the interest rates to go up, because the inflation right now we have seen some fall in agri products as well as in commodity prices, so and also in oil prices. So that should translate into slightly lower inflation in coming months. So we should expect this 7% to slightly soften down. But whereas the interest rates will continue to maintain a higher level, so we should end up somewhere around a peak inflation, peak interest rate should come anything between 6.5 to 7%, because by the year end they move closer to 6.25 to 6.5. Then probably the pace of tightening can slow down next year, maybe 25 basis points, 2-3 meetings, and probably we should see somewhere around 7% by second half of next year. So that is very vital in order to combat the inflation and to slightly bring down the demand side. So all these things have already had an effect on the market movement, particularly the higher interest rate scenario that is playing out in US. Now the US yield is anything trading between 3.8 to 4%, 10-year yield. So it went up to 3.9596, slightly dropped yesterday. So we are seeing a very high treasury yield. So this yield is likely to go up higher, and Fed funds rate is expected to touch something like 4.25% to 4.5% by year end. And next year again they may slightly slow down the pace of tightening, but still there will be some couple of rate hikes next year also. So probably we should see the Fed funds rate even crossing 5%. So we should be at least more than 7% by next year. So all these things translate into slightly lower valuation for the stocks, because we have already spoken on the fundamental factors. Now, if the interest rate is going to be 3.8 to 4, or the Fed funds rate there comes to 4.5%, and right now if you see the P ratio in US, it is coming closer to the 3700 divided by 197. So the P is coming there closer to 18.78. 18.78, and this, if it translates into yield, earnings yield, it comes to something like 5.3%. So the yield here is 5.3%, and Fed funds rate is coming closer to 4.25 to 4.5%, which makes the equity markets unattractive. So this should go up. So now we should see the difference being higher. Now we are seeing the difference bridging, and probably this will make the stocks even less attractive. So as the yield goes up, we have been saying that as the yield goes up, the market tends to have a much bigger fall, because the liquidity factor is very important. The attractiveness of the valuation again is also another factor. So with all these things, we should see the US markets also slightly coming down, and probably now already it has come to 18.78 or so. So we should see another at least 10% correction from here, which means the equity market there, the S&P could go down to 3450 to 3300. So this is the first target that probably we could look towards in S&P, which means what happens is that the Indian markets generally are correlated to US, but last couple of months, there has been some decoupling. That is, Indian markets went up, but US markets was going down. So there was no clear pattern. But right now, the direction has come together. That is, US market is also falling, Indian market is also falling. But magnitude wise, we are definitely outperforming compared to S&P US, and probably will continue to outperform. So that is the advantage that we are holding in the present correction. The present correction, we are definitely better off compared to global markets and compared to US markets. So we will continue to outperform. But the direction has to be mostly will be the same. So unless we see a sustained rise in US markets or global markets, Indian markets also cannot have a very sustained rise, because if you have seen the fall coming to 15,200, rallying by 3,000 points, then it's falling. So this sort of consolidation move has been happening for the last 1 year. It comes down, then goes up by 2,500 to 3,000 points in Nifty, and then starts to come down. So right now we are definitely in a situation where we can only say that we are bearish, because we have seen all the factors right now, technical factors in Nifty. Now it's below all major moving averages. If you see the daily chart, we are below all the 50, 20, 200. So all moving averages, we are below all these moving averages. So very clear that Nifty is right now in the is down. But to what extent it will go down will depend on the coming season also, because the October season, that is the result season, is due in next 2 weeks, right? So starting from second week of October, we will start getting the corporate results. So the results and the commentary will have a major play as far as the market direction and magnitude is concerned. So if at all the companies report good result, and the fall can get arrested. If not, I think the fall can accelerate itself. So this is going to be a testing time where we are going to get report earnings, higher interest rates, and also the other developments that are taking place in the currency market as well as commodity markets. So with this, we will look at then we will look at the asset markets, and then the sectors in the equity markets in which we can be in and out, and look at some specific examples. Now, very clear, when you look at the currency market first, because this is one of the top markets which is now in great focus globally. Now, there has been a very, very clear trend as far as this market is concerned. What is the trend that is there? USD INR pair. Okay, now touching closer to 82 levels. This is a long. This is long, and it looks to be continuously on the long side for some more time. Euro INR now playing around the 79 levels is down. So you can have a portfolio where you're long USD INR, short Euro INR, and GBP INR again right now going around 88 to 89. Again short. So very clear in this asset markets, very little to talk about as far as stop losses and all is concerned right now. So the overall big picture in the currency market is to be long, is to be on the long side of dollar INR, to be on the short side of euro INR, to be on the short side of GBP INR. Now at what level we have to do is something which you can always look at what to do. See here, in the case of GBP INR, right now it is around the 88, 89 levels. So best thing to go short is between 89 and 90. To go short between 89 and 90. Now USD INR on any dip, maybe around 81, 25 levels, you can go long. Euro INR, you can go short at any level above 80. Now it's around 79 levels. So these are the three important things that you can take to look towards making a good amount of money. Okay. So here the trend is very smooth, and swiftly we go through the charts before we jump to commodities and then to the equity markets. We look at USD INR. So this is a daily chart. You can see a very smooth upward move, very smooth up move, and this move can get disrupted only if we have let me say let me okay. So this is the trend line which probably can hold. So unless there is going to be a big fall, which is should be below the 80-15 levels, we should be long as far as dollar INR is concerned. So you can adjust your buy more lots. Suppose the USD INR falls to some level, right up to 80 levels you can keep buying, averaging it out, and below 80 you can remove your any long position, because expecting a fall much below 80 is a very unlikely scenario. So this is a very clear trend, and no, we have had a very good movement as far as the dollar INR is concerned. Considering very low margin, you can be long on the future side itself. You can be long on the future side itself. We will now look at the Euro INR and GBP INR. This is the daily chart. Slightly it has gone up in the last couple of 1 or 2 trading sessions, but likely to come down. Now this is a clear case where okay, so this particular trend line is a very important trend line, and unless it breaks above this particular level, which is the 81.15, this is 81.15 or so. So 81.10, 81.15. So unless it breaks 81.10 or 81.15, Euro INR is a very clear short position. Right now, it is last 1 or 2 days it has gone up right up to 79.52 levels. So we can hold on for any short positions already created, or we can just wait for some more time and then go for a short as far as Euro INR is concerned. Probably we can look at something like 80 plus levels to go short as far as Euro INR is concerned. Generally, there has been some small pickup in the last couple of days, which has aided the Euro INR to go up. But eventually, I think this will start coming down. Okay, look at the GBP INR. So GBP INR, you can see right now, there has been a uptick towards 89.6364 levels, but eventually this movement that is taking place right now probably can also start coming down, because there has been some rally in GBP after its big fall. So there is some rally which is coming up. So we should be in a position, we should get ourselves going towards the short position very shortly. So 89.64. So we should see this particular level. Now we look at the Fibonacci level of the overall from the high to top, this one. $89.92. So we should be at some stage there. It is likely to have a fall. 89.91.92. I think we should be getting ourselves back down from these levels. So 89.91.92. We should be quite careful about the GBP. That's why I said short between around 90 levels, 89-90 levels. So you can go looking towards some position. We can look towards taking some short position closer to the 90 levels. Okay. So this is GBP INR for you is concerned. So the overall thing is that you can be short on Euro INR and GBP INR on upticks, and you can be long on dollar INR on down on some small correction levels. So this is as far as the currency market is concerned. So now we will shift our focus to commodity market. We look at gold. Now before going into that, we have already mentioned that gold is it follows interest rate, USD interest. It has got a good relationship with USD interest rate, and whenever the interest rates go up, gold in dollar terms doesn't go up. Gold in dollar terms doesn't go up. Gold in rupee terms goes up to some extent. but or probably it remains a stagnant a little bit this one. So, but gold on the USD in our USD interest rate goes up. It is not it will not give us a very good return. It will not give us any good return. So internationally speaking, dollar ounce in the dollar ounce trading of gold, it is now coming. It has come down. It went down below 1650 also. So previously it used to hold at 1685 levels. If you remember, many times the USD gold used to come up to 1685 and bounce back. So now any rally towards 1685 is likely to meet its resistance. So gold again is something probably those who are looking towards investment, particularly in the sovereign gold bond scheme or in sovereign gold bond scheme, is a very good investment. But it is better to wait at this point of time, because there can be some more fall as far as gold is concerned. Maybe it will go to 1560 or 1518 international levels. At that time, probably it may look to be a little more attractive as far as investment is concerned for a longer period of time. So right now, as far as the international gold is concerned, it is on the short side. We can see gold clearly on the short side of the market. The daily chart clearly shows that we need to at least get back this place closer to the 1720, 1730. So unless it moves above 1720, 1730, gold stays on the bearish mode, because the entire fall that has taken place from the top, I think that particular trend line has not been taken off. So considering that, we should be looking towards any position going up towards 1710, 1720, 1730 levels as a short position as far as international gold is concerned. We will look at the Indian gold price, gold futures. So we look at the gold mini futures here. And we are, of course, a little more stagnant compared to the fall there because of the dollar rupee factor, which I told you. So dollar rupee, because of dollar rupee, this price is not falling much. Indian gold price is not falling much, but it has to. We need to. This particular trend line has to be cut. This trend line has to be cut before we look towards a move on the upside. So right now in Indian gold price, I would say it's a little bit stagnant. So there's not much of a return that is possible as far as Indian gold price is concerned. But we can look towards investment at every lower level. Investment at every lower level, because this has been falling over a period of say months now. Like our equity markets, this has also consolidated ever since 2020. So the peak which was made in August 2020, I think that has not been broken, and now it's almost 2 months, 2 years, and in those 2 years we have not seen the gold anyway crossing the peak of the 2020. So that means the returns we would have got only when at this level, right? So from here we would have got a return. So there's a chance that probably gold can look towards going at least closer to this level, closer to the level at some stage. At which point of time, I think it will become very good as far as investment is concerned. So that is coming closer to the 44,000 levels, and right now it is at 49,956. So another 10% correction is a possibility as far as gold is concerned. But nevertheless, we are not keeping it right up to that level, because that's going to be a very, very major support. So any fall which takes place even up to this level, so this place, or probably we can look towards even we'll draw the trend line from here, or even yeah. So even this line has been broken. So this is a very consolidative position as far as gold is concerned. So it is better to stay away from investment for the time being, but consider that on any correction of 5 to 6% or up to 10% level from the present position. Now we look at crude oil, Brent crude. Brent cash, crude oil Brent cash. So it went up, went down right up to 82 levels, and it's now trading at 87, 88. Last 1 or 2 days, like either currency, I think this is also getting some leg up, some correction after a deep fall that has taken place. So it has got many legs, of correction that has taken place. So the biggest trend line that we could see is this. So that is going to be a very So this is the line, and that is quite far off. But eventually, unless this line is broken, the crude prices can go up and still fall. Because of the recessionary worries and worries on the demand side, crude has been generally coming down, and we need to see at least the first one that has to get cut is this place. So we should get this, and also the corrections that have taken place, the smaller corrections. This is 91, and this is 103. So $11 to $12 correction has been taking place here. So we should at least get $11 to $12. 82 means 93. So this may go right up to $93. So crude closer to $92, $93 can be a major selling position. So let us wait for some more uptick as far as crude is concerned. Then we can look towards going short there. Okay. So this is as far as the crude oil, Brent crude is concerned. So same thing happens as far as the Indian market is concerned. So the overall factor is we are going to look towards shorting both gold and gold. Stay away, but it is stagnant as far as rupee factor is concerned. So rupee gold is a stagnant factor, not much of trading or investment possibility right now. Crude oil, Brent crude is a sell on another 7 to 8%. Another 7% rally in Brent crude, I think we should become a seller. So this is also remains in the sell mode. Only thing is we are waiting for a correction to sell. So we have already talked about the only long position that we have got in currency market is USD INR. The other two are short positions on correction, that is the GBP INR at 90 and Euro INR at 80 plus. And as far as commodity market is concerned, gold is stagnant. I leave it to the wisdom of the investors. Brent crude is a short, but wait for a correction of 6 to 7% from here, or a Brent crude coming closer to $92 to $93 before you can go for a sell. So this is as far as the commodity and currency markets are concerned. Now we will look at the equity markets and one or two stocks. Generally, Nifty, now I told you, has broken all the important moving averages, and it is trading closer to the 16,800 levels or so, right? So the next support normally, we should be expecting should be the 16,650 or so. So we look at it. Today, SPX, the US index is now almost closer to the last important low. So it's now trading 1.9% lower, which means further and further fall is now taking place as far as the markets are concerned. And we should be a little bit careful about all this. Okay. So now let's look at this. So the important support now is 16,800 levels. That is where it came support. It took place 16,788. So at one point of time, there was a rally from this place. If you let us look at the 1 hour chart. So it came down to 16,825, 800 levels. If you see, 820, 820, 830, and stagnated around the 788, 800 levels. So now we are going to. That is a very important support. This is because if you look at it, this is a weekly pivot. Nifty weekly pivot is 16,793. So that is where it came today, 16,788, and took some support. So eventually, if this is likely to get broken, then in that case we should see the next important high that is coming is 16,275. So we are looking at 16,275. So Nifty support from here is around 16,275. So let's look at the Fibonacci ratio also. Now, if you look at the 50% retracement now comes at 16,630. So that's going to be the first support from now. 16,630, then 16,283. 16,650 or so. This is going to be the next support. That is the 50% retracement, 50% Fibonacci retracement comes at 16,630. And then 61.8% comes here. So mostly we will have some bounce tomorrow. Let us say it falls, because today SPX is falling. So the first thing is that it is likely to go down here. Immediately you can see algo players coming and buying closer to 16,630. So we expect the first support to come closer to 16,630. It can give you a bounce back to 16,800, or even go up to 16,950, 975. That is what we have seen some support a couple of days back. So 16,800 to 16,975 may be reclaimed on after a fall towards 16,630. That's the first possibility, which can happen even tomorrow. Then if it is going to fall below 16,630, then in that case the next big support that we are looking is 16,300 levels. 16,300 levels. So now, since it has fallen, if you look at it now, it has fallen below the 38.2% retracement. So the first resistance will come closer to 16,975 itself, because that is the first support which should have held. Now, since that is gone, we should be expecting the next level of resistance 17,165, because this week it was not able to claim much above that. So 17,170 to 180 levels. So the resistance that is going to come on any rally will be 16,175 to, let us say, 17,200. So this is a place that has to be watched for any upward movement, and only if it starts to break this particular level, 17,175, 17,200, we can be confident that probably the market can still move towards 17,700 levels or so. So we have a strong resistances that can come closer to this, because that is the place where some of the moving averages are also there. Now Nifty, if you look at it, put the daily chart, and we look at the moving average. So this is the, we'll shift it and let's look at the placement of 250 moving averages. So 200-day moving average has been cut decisively. So I think it has started to go below the 200-day moving average, which itself means that we are the bullish factor is out. Now we look at the 50-day moving average and see where it is. So 50-day moving average has been cut, and that comes to 17,402, 403. 17,402, 403 is going to be any rally should have a big resistance towards that. We look at the 20 and 100. 20-day moving average 17,567, because 15-day is below that. I think anyway we are looking at a bad situation there. Then let's look at the 100-day moving average. Day moving average is where probably the next support, because there is one more moving average to be cut, that is 16,709, and that is what we said, 16,640 or 650. There is a chance that it can slightly penetrate below that and take some support. So what we are looking at that 16,650 or so, and this particular resistance point, that is 16,000. It came to 17 last 2-3 times, just went slightly above that 17,000, 16,000, 17,000 and odd. So 16,975 to 17,000. So that's the place where probably a lot of resistance is coming. So probably there is a chance that from 16,650 it can head towards the 17,025, 17,030 mark. and any further rally we may get cut around 17,150, 160. If you see, this is the one, 17,200 levels. This level, 17,165, 166 levels. So that's the important resistance that's going to. So unless we are going to claim this gap up, gap down. So this is the gap down. So unless we get that back, I think we are not going to get out of this market that easily. So we are looking at filling up of all the gaps, and this gap now, which is coming at 16,650, which may get filled up. Then we have this thing which is 16,350 levels. So eventually we will see right up to 16,275 going by the present situation which is there in the market, because the overall global markets are shuddering literally, and we are outperforming, but we can't escape. So to that extent, we should be a little bit careful about building long positions here, and we should wait for investment to see how the global markets recover, and Indian markets also. But one thing is that probably I am quite confident that probably we may not see testing of the bottom, but even if it comes closer to the bottom, 15,200, 400 levels, I think that may not be the time to panic. That may be the time to build your investment. So right now, Nifty is a short, and the stop loss that's going to come on a daily basis now, since this is now at this level, which will get broken at some stage. So we should be looking at only about 17,200. So right now we are seeing only about 17,165, 17,170 or 180 is the short position. Now Nifty short, en route to 16,300, stop loss 17,200. So this is the overall view that we can take as far as index Nifty index is concerned. We will look at the bank Nifty. Now bank Nifty, let us say whether it has gone below the 200-day moving average. It's still above the 200 and 100. So there is a chance that we may get a support closer to 36,550. 36,600 could be a support as far as bank Nifty is concerned. We will look at the 50-day and 20-day moving average to see. 20-day moving average is around 40,000. Okay. Now we will look at the 50-day moving average. So it is broken. So now 38,900, we can say 38,800. 38,800 on the top side, and the 200-day moving average is 36,600. So bank Nifty around 36,500 to 800 levels on the downside, and somewhere around the 38,200, 300 will be the top. So it is likely to move in this range. So you can be looking towards some sort of a buying closer to 36,500, 36,800. But if it starts to rally, then it becomes a short closer to 38,200. So bank Nifty is also on the down move. Particularly we have seen so this trend line has been broken. So this line has been broken, and also this area, this top, which is 39,775. So we are looking at the presently it has to get climb above the 39,775 to re-establish the long side of the market right now. So the next fall is going to take place in a staggered manner to 36,500 or 600 levels. Of course, there will be some support that can come at every important pivot points. The first price could come towards 37,240. So there is a chance that probably tomorrow it can head towards 37,240 and take support. then probably then the next point will be only this, which is near the 200-day moving average. So we have a 37,240 as an important, as a intermediate support is 37,240, where there can be some intraday support. There can be some intraday support coming for Bank Nifty at 37,240. But overall right now, the top banks, HDFC Bank, SBI, ICICI, all are looking weak. So most of the stocks now, whether we talk about FMCG stocks, commodity stocks, IT stocks, all stocks are looking weak. But predominantly what we see is that the major collapse can come in commodity markets, because inflation being a factor which is being attacked right now with higher interest rates. That's why we said for a long time now commodity being on the downside, and we even suggested Tata Steel to be shorted either towards the put spread. Towards a put spread, we said last time that do a 105.95 spread at least, and today it has come down to 96 levels, 95-96 levels, giving good amount of money there. So the preferred thing is to sell Tata Steel on rally. So let's look at that. So Tata Steel is clearly below the 200-day moving average. It is to be shorted, and let's look at the weekly trend. Weekly trend very clearly on the downside, because you see lower top, lower bottom. So unless this particular low is taken off, which is 103, we remain bearish as far as Tata Steel is concerned. So any rally, any pickup in Tata Steel from 97 closer to 102, 103 now looks will make it still a short candidate, and probably it can go towards the back towards the 82, 83 level. So Tata Steel is a favorite shorting stock, because the overall sector is likely to be on the weaker side. Now contrary to that is the auto sector, which is a user of commodities. So let us see whether the auto stocks are where the auto stocks are. We look at Tata Motors and Maruti. We look at Maruti, Tata Motors and TVS Motors. Now Maruti also for the time being seems to have made a top, because this week fall has been quite steep. This week fall has been quite steep. So for the time being, though on a fundamental factor, auto stocks can do well after some time. Right now it looks as if we should not also be on the long side when the whole market is falling. So if you have already built long position in Maruti before, it is time for us to get out of the stock there also. So better, you don't need to short, but you can book your profit as far as Maruti is concerned. If you look at TVS Motors, on a relative basis, TVS Motors is still okay compared to other stocks. But right now, this particular pattern, the deep, particularly in the weekly chart, shows that we should be very careful about holding the stock right now. So even TVS Motors is a time for us to book our profits and wait for a fall before we can launch into a bullish mode. So even that particular stock should be in for a profit taking. Now we will look at the IT sector, the favorite being TCS and Infosys. So let us see that it is below that. If you draw, it is still below the trend line in a weekly chart itself. So it is still not at no point of time it has come into any bullish mode. Right now TCS, if it rallies, it can meet a resistance closer to 3080 or 3100. But right now, for the time being, it is holding on to this. This is the has been generally holding on to the 29-25 levels. But we may see this particular point being taken off at some stage unless we get a very good result. So probably TCS could head itself back to the 26.15, 26.20 levels. So the possibility of a 10% fall still is there. TCS around the 2600 levels, it can move down with the resistance closer to the 3100. So still it's not looking that good. Still not looking good. But at this level, probably it can start becoming more attractive. So that is TCS. Now the same thing applies, of course, the to Infosys also. We look at Reliance, then we look at ICICI and SBI. Reliance Industries. Now this is again a weekly chart, and because Reliance is always impacted by some changes in the crude oil prices as well as GRM margins, and right now the crude prices are coming down, so probably Reliance could have a fall which could probably get arrested. See, this is a fall which it should have got 2350, it should have held on, because for a very long period of time it did not crack below 2350 levels, but or 23 years. So now it has started to crack below 2350. I think we should be looking at a level which should be closer to the 2180 or 2200. So at 2180, 2200, I think the stock can become quite attractive from the fundamental point of view also. So 2180, 2200 for Reliance is something where we can get a 10 to 15% return in a year. Is definitely possible. So 2180 to 2200 is recommended for investment, but at this point of time, better not to be there even in Reliance is concerned, because there can be a slight fall of 5 to 7% is possible as far as Reliance is also concerned. Now we will look at ICICI and SBI. See, a couple of weeks back we said that ICICI is also likely to top because the book value has gone closer to the 4. Okay. And normally it tops at around 4.1 book value when it price to book value. When it comes closer to 4 to 4.1, it tops out. So right now this also happened very closer to 4 to 4.1 book value, price to book value. So it has started to correct. So definitely we need some sort of a correction, which we at least normally, if all these things go for a correction, it can come closer to 11 to 12%, 11 to 12%, or probably we can even see in all these big corrections that has taken place right now, except for this pandemic time. Now we have seen the bigger fall coming here between 867 and 642, which is 867, 642 is around 200 rupees, right? So 200 divided by 867, it is around 23%. So not that we should get at least 23%, but we should get something like at least, even if there is a fall that is going to take place up to 12%. So the first thing, it could be 12%, which is be 936 into 0.88, if it's say it is 823, 825. So 823 to 825 place, right now it has come down already to 841. So 823 is very closer to that. That means it has already around 10 to 12% fall has already taken place. So if this is going to extend, then we are going to get this place. This is the 777, 780. So chances that it could bottom out this time closer to the 777 or 780 levels. So it could take a support closer to 780 levels and start moving up. So because that would have meant a correction which is 160 rupees, which is more than around closer to the 18 to 20% correction. So we will look at something like a 778 to 780 as far as ICICI is concerned. At this point of time, that is going for some different for correction. So there also we can remove our long positions. HDFC Bank is also going for a correction. So this is the place where probably we could so the 13, 14, 13, 15 levels, right now it's at 1378 or 1382, and already that has also fallen from 1540. It has come down by 170 rupees. So around 10 to 11% correction has taken place. So we should wait for another 10% correction before we can go for a long. So the same place, that means this is the this is where it is. We should be seeing this HDFC also bottoming closer to 1260, 1270, at which level it can again start becoming attractive. So 1270 levels is where HDFC Bank can look towards getting a base, and for some more time we should see 1270, and then probably this is 1540. So it could play itself between 1300 to 1500. So you should be those who are looking for some trading opportunities within this 10% range should look towards buying closer to 1300 levels, and then should be looking to exit around the 1450 levels. So that is as far as HDFC Bank is concerned. We look at SBI. Normally it is now SBI is definitely a buy on dip stock. State Bank of India. Most of the PSU banks are like that right now, but we need to wait for some down move. And let's look at the 61.8% Fibonacci from this level, or 50%. 50% comes to 500, and 61.8 comes to 482. So we can look towards up to 482 levels. So 482 right now it's at 521. So SBI, I think we should look towards at 485. Around 485 we could look towards buying SBI as concerned, because most of the PSU banks are buy on dip stocks. So at this point of time, the overall theme is equities are generally down. They are mostly, you have to be, if you are not book profits, you should have on any small rally book profits. If you are going to trade, look towards short candidates. In that, which sector is going to be much weaker? Commodity sector is looking much weaker compared to other sectors. So better go short in commodity stocks like Tata Steel, time being. And then Bank Nifty, generally banks are looking in this bull run, banks did extremely well. So wait for a correction before you can go on board as far as ICICI, SBI and HDFC Bank is concerned. Since crude oil price is falling, Reliance could come right up to 2200 before you can look for investment. IT sector is still expensive compared to its valuations, so there's chance that it can still correct by 10% down on the downside, so you can wait. Now as far as Nifty is concerned, it is down to 16,650 is the next support. Possibly can move down up to 16,300 levels. Resistances come closer to 17,000 to 17,200. Bank Nifty 36,500 is a support where the 200 100-day moving averages are coming, and then you got a 38,000 plus where the 50-day moving average is coming, 38,400 to 500 levels. So that is likely to be a resistance on any up move. So Bank Nifty also, those who are already long should exit on any rally and then wait for a fall to 36,500 before you can go for an entry. Now overall commodities, gold is stagnant, rupee gold is okay, but you can always wait to buy because the investment is not going to produce excellent result immediately. Crude oil is concerned, it is a short candidate on a rally of 7 to 8%. In currency market, you can be long on dollar INR and correction. You can be short on euro INR towards 80 levels. You can be short on GBP INR at close to 90 levels. So this is the overall situation of currency, commodity and equity markets. So if you have any questions on this, please ask now. Thank you. So thanks for your participation today. Let's see you on Monday. Thank you very much. Bye.